Today, I want to talk about tax deductions, but before we do that, I want to talk about workflow. Because if your workflow is broken, your bookkeeping probably is too. One of the biggest mistakes I see owner operators making all the time is treating bookkeeping as if it's something you can do at the end of the month, or even worse, at the end of the year. By then, receipts have disappeared, details have been forgotten, and you're trying to piece together something that happened months ago. I don't think bookkeeping should work that way. I believe bookkeeping happens the moment you spend the money. That's why I like cloud accounting software like QuickBooks Online and Zoho Books, because they are designed around mobility. Your office isn't in a building, it's your truck. So whether you're fueling, paying for a repair, buying supplies, or stopping for the night, you always have your phone in your pocket, and it just takes a few seconds to capture a receipt while the information is still fresh. Instead of carrying around, piles of paper or filling up shoe boxes, you're creating a digital record as you go. So by the time you get home, most of the work is already done for you. Here's why that's so important. It isn't about what you spend, it's about what you can prove. The IRS doesn't know what you spent, they only know what you can document. Every receipt you capture is a piece of evidence that supports your business's expenses. Good workflow doesn't just make tax season easier, it helps you keep better books, be audit ready, and understand exactly where your money is going. So now let's talk about tax deductions. Let's start with one of the biggest deductions available to many truck drivers: per diem. Per diem isn't reimbursement for a specific meal. It's the IRS's way of recognizing that drivers who are away from their home overnight have meal expenses that are difficult to track one receipt at a time. So if you qualify, you generally don't need to save every receipt for breakfast, lunch, and dinner. Instead, you're allowed an applicable per diem amount for the days that you were away from your home, subject to the IRS rules that apply to your situation. The important part is keeping accurate records of your trips, dates, destinations, and the time you're away from home all matter. Without good records, it's difficult to support the deductions if questions ever come up. This is another example of why workflow is so important. The better your records are throughout the year, the easier it is to calculate deductions accurately when tax season arrives. Let's talk about clothing. There's an area where a lot of people get tripped up. And just because you wear something to work doesn't automatically make it deductible. For example, your favorite pair of blue jeans and t-shirt generally are not deductible simply because you wear them while you're driving. On the other hand, items like steel-toe boots, safety glasses, hard hats, reflective safety vests, work gloves, rain gear designed for your work, and other protective equipment that fit business purposes generally are deductible. The rule of thumb is this: if it's specialized safety equipment or clothing required for your work, it may qualify. If it's ordinary everyday clothing that you could wear anytime, anywhere, that generally isn't going to count. As always, keep your receipts. Next, let's talk about fuel. For most owner-operators, fuel is the single largest operating expense. Every gallon you purchase for your truck is generally a deductible business expense. But that fuel receipt is doing a lot more than supporting a tax deduction. If the carrier, that same receipt also documents where you purchased your fuel and how many taxable gallons you bought. Those receipts become part of your quarterly IFTA tax return and can be critical if your records ever are audited. This is another reason I believe in good workflow. One receipt can support your bookkeeping, your tax return, your IFTA records, and help you understand fuel costs. That's a lot of value from something that just takes a few seconds to get an image of, to capture it. I also encourage drivers to pay attention to more than just the total amount that they spend. Track your cost per gallon, track your miles per gallon, watch how fuel prices change from state to state. When you combine fuel purchases with your odometer readings, you begin to understand one of the most important costs in your business. Remember, bookkeeping isn't just about taxes. It's about understanding your operation. The better your records, the better your decisions. Let's talk about office expenses. Many owner-operators think they don't have an office because they don't lease office space. The truth is, every trucking business has administrative costs. Think about the things you use to run your business, not your truck. Pens, printer paper, ink cartridges, folders, file cabinets, staplers, envelopes, postage, accounting software, dispatch software, cloud storage, computer equipment, printers, a laptop or tablet, a business cell phone, or the business portion of your phone usage, internet service used for your business, business checks, bank fees. Office supplies may not seem like much individually, but over the course of the year, they can add up to hundreds or even thousands of dollars. And remember, it isn't about what you spend, it's about what you can prove. Keep your receipts, keep good records. Those small purchases are easy to forget, but they're just as much a part of running the business as maintenance. Take a look around your truck. Seriously, look around it, walk around, and everything you see you bought to help your business may represent a business expense. The tires, the mud flaps, the toolbox, the headache rack, if you're a flatbedder, chains, if you're going out west often, straps, right? Tarps, load locks. Everybody uses load locks. How about the fire extinguisher? Safety triangles, right? You have to have those. The CB radio itself, it's great safety equipment. Your GPS, dash camera, ELD, the APU, the refrigerator, right? You got to keep your food somewhere when you're on the road. The inverter, work lights, spare bulbs, windshield wipers, def, cleaning supplies, right? The floor mats, seat covers. If you purchased it because it helps you operate your trucking business, it may be deductible depending on the tax rules. The important thing is to save the receipt and keep good records. Because remember, it isn't about what you spend, it's about what you can prove. And finally, let's talk about depreciation a little bit. This is one of the biggest tax benefits available to many owner-operators but it's also one of the most misunderstood. When you buy something that's expected to last over several years, like the tractor or the trailer or the APU generator or even a computer, you generally don't get to treat it the same way as you would like a tank of fuel or an oil change. Instead, the tax code often requires that those costs to be recovered over time through depreciation. Now, here's the good news. Depending on the tax rules in effect and your individual circumstances, there are situations where you may be able to deduct all or a substantial portion of the purchase in the same year you place it into service. That's where Section 179 and bonus depreciation come into the picture. Those rules can save you a significant amount of money, but they're also complex and deserve a discussion all of their own. Rather than trying to cover them in a few minutes, I'll dedicate an entire video to depreciation, Section 179 and bonus depreciation, because understanding those can have a major impact on your business. The takeaway is this: tax deductions aren't about finding clever loopholes. They're about building a system that captures your business expenses as they happen. Good workflow leads to good bookkeeping. Good bookkeeping leads to better financial decisions. And better financial decisions build a stronger trucking business.